Okay, so real quick, while you get set up, Rogelio, I just want to introduce myself and why we've created this. I'm Donica Patton, and I own Where Do You Go Now? And this was created back literally during the pandemic on March 13th, Friday the 13th. And the reason this was created is, so I'm a licensed realtor broker. And back when the market crashed in 2007, 2008, I made it my mission to help those that were losing their homes. I'm actually a published author and wrote a book on how to help people avoid foreclosure. So when we started this pandemic, I was asking my team members like Izumi and all these other people I'm partners with, we were trying to figure out how we could give back in the community in terms of what we're dealing with. So we created this show, a live Q&A that's every Thursday, same time at 4 p.m., to help educate those in real estate during the pandemic and beyond. So without further ado, I'm going to introduce you to Izumi, who I'm so honored to be partners with. She's a green realtor, and she's been doing this business a long time as well. So Izumi, I'm going to let you take it away and introduce yourself, and I look forward to today's live Q&A. So thank you for coming on, Rogelio.
Thank you, Danica. So happy to have you. Well, so happy to be here with you and have Rogelio. So without further ado, Rogelio Martinez. He is a Mr. ADU. He comes with a wide range of qualifications. He's a licensed real estate agent. He's also a California mortgage loan originator and City of LA power generation steam and turbine engineer and certified refrigeration EPA 60A universal registered home improvement salesperson and designated ADU specialist.
Oh my!
So, and that's one of the reasons why we have him today with us. So Rogelio, tell us about you. What is the qualification as an ADU specialist?
So great question. And as a matter of fact, first, even with those abundant qualifications that I have, I actually can't tell time because I was late. So I just wanted to start off by saying I apologize because I want to respect your time. So thank you for having me.
You're welcome. Thank you for being here.
So Izumi, to answer your question, so what makes me a certified ADU specialist is I actually took the journey to the one and only place that has actually a certified course, and that's Portland, Oregon. So in Portland, Oregon, there's a company called Earth Advantage, and currently right now, I'm sorry. At the time, they were the only entity that provided an ADU certification or ADU specialist designation. There you go. That's what it is. It's not a certification. It's a designation.
Mm-hmm.
Since then, there's been another entity that has started its own designation program. So now there's 2 in the country, and which is outstanding because the more people that we can the more people that we can educate, the more people that we can empower. So yeah. So I went to take that ADU specialist designation course in Portland, Oregon through Earth Advantage.
Earth Advantage.
And you know what, Izumi, you're going to have to look at them, and the reason why is because they're all about green. So they're all about net zero energy, passive house. I mean, you name it. In that area, in the western states, they're the leaders in how they build homes.
Yeah, that's great. So tell me about financing ADU. How is it different from traditional, conventional financing?
So I wish that I could be the person that tells you that I have the silver bullet, that I have the magic ingredients or the secret sauce to sprinkle on that to let you know I've got the secret. So literally just do business with me and you're going to be set. The reality is that I'm a licensed mortgage loan originator, and I've been licensed for 10 years. And I chose to be, from the very beginning of my career, a mortgage broker so that I can offer an abundance amount of products for all of my clients. And so literally actually no, the 8 out of the 10 financing options that I'm going to cover today, any mortgage broker can provide them. Now, whether they choose to or whether they have a specialty in being able to provide those or even speak intelligently about the 8 products, that's a different conversation. But meaning I do not have, so I always am very, very transparent with everybody. I don't have a special loan just exclusively for ADUs. I use traditional financing instruments that we'll go over, to finance these ADUs. And then I use 2 non-traditional that actually do not have mortgage payments whatsoever. So when I save those for the last, because when people hear, wait, what?
I
You mean
know.
I can get an ADU with no mortgage payments? I said, yep, you can. And then they're like, whoa, now I'm really interested. Now I'll listen to you, even though you were late.
Yeah, so tell me, so what's the difference? I mean, is it different? Like, is what you have to offer specifically for ADU, how are they different, or how are they same? But how are you able to offer these financing for specifically for people who are considering of building an ADU?
Great question. So even though I provide 8 traditional and 2 non-traditional loans, I tailor it to every client. So that's one thing that is totally different is, when you do business with any mortgage broker, and this is not anything that's new, but you're going to do one loan application, and they can submit your loan to multiple companies to see who is going to be able to get the best terms, the best rates, and so on. So what I do is, because I really am, now I speak ADUs, right? So for just under 2 years, I mean, now it's my lifeblood. I've shifted my entire business exclusively to ADU financing. I'll start with number 1. So the most popular way to finance an ADU is through a simple cash out refinance loan. And it's like easy peasy. Now, so specifically, this cash out refinance loan, that's the key word. A homeowner is going to take cash. They're going to be dipping into their equity in order to build the ADU. So currently in today's market, with the climate that we're in, and it's not, it's kind of like it's kind of the after effect of what the illness has caused. But so it's not that there's a lack of business, but right now all the banks are hitting the end, the consumer, the homeowner, with a higher cost to take cash out on their home. So if somebody was to do a cash out refinance versus a refinance rate and term, there's a pricing difference. And the reason why is because a lot of lenders just do not want homeowners to tap into their equity, even if it's to improve their property. But if they do, they're going to take a little bit of a hit. Not that big of a hit, but they do take a little bit of a hit. So for example, someone that can get like a 2.75% interest rate might be able to get like a 3.15% when it comes to a cash out. So the rates are a little higher, but not that crazy high. So that's option number 1, a simple cash out refinance to pull the extra money so that you can build the ADU. I think we lost Danica.
She's still here.
Oh, is she? Okay.
She's still here. She just turned off the camera.
She's got that great photo. Like a movie
So
star
my
photo.
question is though, if you were to refinance your mortgage when you are building a ADU, does it involve any sort of rezoning or lot splitting, or does any of that matter to the bank, or how does that affect?
That's a great question, and so today it does not technically, and the reason why it does not in the traditional sense is because the underwriters right now are so inundated with a sheer volume of refinances that, and I'll just throw a little bit of stats. So refinances right now from start, so from submission to when they're actually recorded, so from start to finish, is typically about 21 days. That's the quickest, right? Not from submission to loan approval, not from submission to loan docs. I'm talking about from truly from start to finish. From start to finish, it's going to be about 21 days. That's going to be the fastest that anybody can pull off in today's market environment.
Mhm.
However, we've seen the worst case scenario, which is up to 6 months. And so this is legit. Somebody that wants to do a refinance in certain pockets of the country they're literally waiting 6 months to be doing a refinance.
Mm.
And it has and the reason why is because the rates are so favorable. The cost of lending is so is so cheap or relatively inexpensive that we've never seen this much volume in the history of lending. So I'll throw one other thing because I'm very, very nerdy. Money is not created when the Fed Reserve prints money. That's not how money is created. Money is created when we do loans. So when we create loans, that's actually how money is really created in this country. The paper money is just the paper money, but true money is created when we do more loans. So in the history of residential financing, we've never seen this. This is literally unprecedented times. And the more that you phenomenal realtors like Danica and yourself, Izumi, the more that you are spreading the message that it's a great time to buy or a great time to downsize or upsize. Literally, what it is it's just a continuous volume. It's that little snowball that literally starts gaining and gaining momentum as it's going down the hill, and it's just like this humongous thing. And that's literally what's happening. Every lending institution right now is doing a massive hiring. So if you're if you're a Chase, a Bank of America, a Wells, a Loan Depot, you name it, if you're a big lender, you're hiring in the thousands right now. Loan Depot, which is one of the companies that I broker mortgages for, every 2 weeks they have a job fair, and they're hiring all positions from sales to ops. So the hierarchy, and I know I'm digressing a little bit, but this is really, really value added for all of your listeners. The hierarchy on how lending institutions currently are lending today is if you have a cash out rate and term if you have a refinance that's only rate and term, you've got priority. That's number one. If you're a cash out refinance, you're priority number two. If you're a purchase money loan, you're priority number three. And then if you're a renovation loan or anything else, you're priority number four. Priority number four is literally getting hit the hardest. They're literally at the 4 to 6 month range.
Mm.
And so, yeah, I know that was a gangbusters of information. We haven't even talked about that from 2 to for the other 9 options, but I thought that was a good basis or a good
Sure.
context, you know.
Sure. So is that the refinance? So the ADU financing would fall into the cash out, and how much of it is? I mean, how prevalent right now is that? How many people? Like, what's the percentage of people who are getting the refinancing or financing for ADU? Do you have any data on that?
Yeah,
Great question.
actually, it's a phenomenal question. It's about 1%.
Oh, interesting.
Yeah, it's relatively tiny,
Mm.
right? So the majority of the cash outs are literally for cashing out to do whatever, or they're just doing a rate and term. So let me dispel that one rumor. We are not in the ADU gold rush age. We're not in the ADU adoption stage. We're not in the ADU explosion phase. We're in none of that stuff. We're literally right now in the ADU education phase. Less than 1% of all Americans across the country in major markets like Atlanta, DC, the Bay Area, San Diego, you name it, whatever, even Los Angeles, my own county. Literally, if I was to walk around the street and ask 10 people, hey, do you guys know what an ADU is? 9 out of 10 would actually tell me I have no freaking clue what the heck an ADU is. So literally right now, you know, like I'm financing a ton of ADUs, right? I've got a ton of business, but the reality is that I have nothing. It's like a little grain of sand. Right
Mm,
now in LA City alone, which is the leader in California, they're on pace this year to probably approve like 5,000 ADUs. Of
mm,
those 5,000, which think about it, that's the largest city in California. 5,000 is really nothing. It sounds like a lot, but it really is nothing.
right.
Um, of the 5,000, realistically, how many are going to be built this year? Maybe less than 1,000
Mm,
is realistic. And the reason why is because there's other factors. There's external factors like do you have enough skilled labor? Meaning, is there enough contractors to build all 5,000 simultaneously at once? No, there isn't. Is there enough materials? Soft lumber, which is the wood, gypsum, which is the drywall, copper for plumbing, PVC for the gray water, right? You name it. There's literally like it's just not happening that quick.
mm,
So everybody that's building an ADU right now, I mean everybody is a freaking pioneer. It's like literally the Lewis and Clark journey across from the eastern side of the United States across the continental divide into the Utah, Wyoming, California, Nevada, you know, all of those states. Literally, that's where we're in right now. We're in the ADU exploration phase. You know, I've been in this game for like literally 2 years, and literally less than 1% even know what an ADU is.
So, that's really interesting because we as realtors and, people who are in this um, kind of world of real estate, ADU is rave, right? So we have a lot of people watching today that are anxious to hear about all these other options of how to finance the ADUs. People can only come up with, refinancing Heloc, right? So let's hear the rest of the ways that we can finance the ADUs.
Yeah. So again, like Izumi said, all you amazing people that are listening to this message, you guys are pioneers, and I applaud each and every one of you because really you're the trailblazers. You're setting the trend. So the next is HELOCs, home equity lines of credit. Typically people are like, oh yeah, I know exactly what that is. It's a second position, you know, line of credit. No, I offer two flavors, just like a vanilla and a chocolate. I offer a first position. Yeah, and that's true. You know what? I should have probably been like a stand-up comic on the side rather than a mortgage. I'm gonna add that to the freaking list actually now.
Yes,
Um,
yes.
right? So, and you know what, Danica? Izumi knows me, but you don't. But I am freaking crazy. Like so. So when it comes to ADUs, I'm the most vocal person that you'll ever meet when it comes to ADUs, and I don't care who's in front of me. If they're willing to listen, I'm going to tell them exactly what an ADU is.
Great.
So so I do offer a traditional second position home equity line of credit. That market is actually dried up because of the onus, but I do work with a lender, and you can look it up. Like I said, I don't have there's no silver bullet, there's no magic, so I'll give it up to everybody. CMG Financial, they're out of the Northern California. They offer a first position home equity line of credit. The reason why that is so freaking powerful is because of the fact that when a homeowner says, you know what, I read Rich Dad Poor Dad, I read Robert Kiyosaki's book, right? I know that my home is not that it is not an asset today, but I want to I want to convert it from a liability to an asset. So now I'm going to convert that 2-car garage into a rentable income producing unit. In a first position home equity line of credit, you can take that rental income from your ADU, which was previously a freaking storage for stuff you never even used, or your car that you don't even drive, and literally you will put that rental income on freaking steroids. It'll accelerate your mortgage like you've never seen before. And I'll just do this little simple thing, right? So typically when a homeowner makes a payment, literally, okay, this is the date of the payment. This is what happens to principal. Next 30 days, this is what happens to principal. Next 30 days, and I'm just showing that a little so you can see that little offset, that little delta. In a first position home equity line of credit mortgage, literally anything you throw at it goes 100% to frickin' principal, which is like crazy because this is what that looks like. So
Wow.
$1,500 goes right to the loan. It drops like this, literally like this, right? As you start using your debit card or your checks, right, then the balance starts doing this, right? But what's left is now you've got a bigger delta, and now what's happened is because you know the interest payment is based on the average daily balance. Even your payment is freaking dramatically less. So anyways, CMG Financial, don't take my word. Look, do your own research. CMG Financial, it's called the all-in-one loan, right? It's a company that I work with, not for, but I work with. So we just talked about three: the cash out refinance, second home equity lines of credit, the first home equity line of credit, and then the third is we get into the ones that are actually going to start being the main ADU loans, and that's the 4 renovation loans. So most people are not even aware that there's 4 types of renovation loans. There's a VA renovation loan, and again, VA, not virtual assistant. So if everybody's thinking about virtual assistant, that's not what I'm talking about. I'm talking about the men and women that served our country, right? That served our country. And yeah, we're not coming into Labor Day. No, I'm sorry. We are coming into Labor Day. We're not coming into Veterans Day, but the reality is that that's the VAs that I'm talking about, right? And so Izumi, when I'm saying that I tailor an ADU loan for each and every client, that's what I'm talking about, right? So if it's a VA, if it's a vet, right, then I'm going to give him a VA renovation loan, him or her, a VA renovation loan, and they're going to be able to create that ADU with a VA renovation loan, which is like amazing. Because I know for all of you vets that are listening to this show, I know I don't need to tell you, but you have probably the best loan, and you should have the best loan, right? You've got no mortgage insurance, truly 100% financing. That's the power of a VA loan, and you deserve it. Next up is the Government Insured FHA 203K. What? Did he say 203K? What the heck is that? Yeah, that's I didn't name it, right? The Federal Housing Authority named it, HUD. But what that is a government insured renovation loan, and you could use this to build an ADU. The power of that, oh my God, there's so many freaking things. I'll just throw one at you, just one little morsel. If the third party HUD consultant says, Izumi, Tanaka, you can't live in your home, right? You want to improve the primary dwelling unit, the PDU or the SFR, the single family unit, and create an ADU, you can't live in it. It's not going to be habitable. You can finance up to 6 months. Yes, I said up to 6 months mortgage payments. You can wrap them into the loan. That way, if you've got to live somewhere else, you're not worried about making those mortgage payments, right? And also making payments of a hotel or whatever, right? That's just one of the advantages of the FHA 203K loan. Next up, we've got if it's an investor, right? Because the FHA is owner-occ, right? VA is owner-occ. But the next up is the Fannie Mae Homestyle, right? So if you're an investor and you want to build an ADU, that's the loan for you. So that's the Fannie Mae Homestyle renovation loan, and depending on the amount, you may or may not have to have a third-party consultant to be there with you. And then lastly is the brand new, the newest of the bunch, which is the Freddie Mac Choice Renovation Loan. And the reason why I called them the Brady of the bunch is because Freddie Mac just published an article like about 3 to 4 weeks ago where they scoured. This is my scoured. They scoured all 800 MLSs across the United States. And what they did is they said in real time, I want to know right now how many ADUs are being listed throughout all multiple listing services across the US, all 800 of them. And they come up with 1.4 million. There's literally 1.4 million at the time that they published the article, ADUs that were listed on the multiple listing service. And the crazy thing is that they came up with this freaking amazing infographic because nobody, so even that is fragmented. In some parts of the country, it's a grand unit. In some parts of the country, it's an in-law suite. In some parts of the country, it's a side kick home. Some parts of the country, it's a darling unit. I mean, you name it. It's a freaking gamut of lists. You know, I think I can come up with my own name. I'm gonna call it what am I call it? Oh, I do. I did come up with my own name. You guys want to hear what I come up with when it comes to ADUs? Danica, say yes.
Yeah.
Yes.
Awesome dwelling units. That's what an ADU is to me.
Awesome.
Yes.
Because I don't like to say the word accessory because
Yes.
you know,
It's
I just
great.
can't say accessory that good. It sounds
Yeah.
like I'm talking about some like rated X stuff, accessory or something. I don't know. So I just think awesome sounds way better. So let's see, Izumi, Danica, I just covered 7 freaking loans. Nothing exotic. It's just knowing how to use it. And it has to be tailored to the individual homeowner. Last on the mic is for my 62-year-olds or older. A reverse mortgage refinance can be used to finance an ADU. So those are the 8 ADU traditional loans. Nothing that I said, you know, maybe one of those, maybe the VA, because a lot of people say, wait, VA has a renovation loan? Maybe I get that. Or maybe the Freddie Mac has a renovation loan, but everything else, everybody's already heard. So yeah, any mortgage loan originator that's a mortgage broker, ask them, hey, do you offer these? If not, I'm gonna do business with Rogelio. There you go. I said a lot, huh?
So did we hear how the reverse mortgage renovation loan works? Is that just similar to reverse mortgage?
Yeah,
Okay.
it's very similar to reverse mortgage. So literally it's age dependent, and it's for those. Here's the thing, and you know what? I know you're not going to want to hear this, Izumi. Danica, you're not going to want to hear this. Remember, all 3 of us right now are licensed real estate agents, right? I'm a whatever quadruple or quintuplet agent because I've got other these freaking licenses. But the reality is that these words that I'm about to say are bad words. How would you like to downsize? See, those words don't come out of my mouth anymore now that I understand the power of an ADU. I do not want to convince my aging homeowners to have to leave the home that they raise their kids, right? My solution is, hey, let's build you a 1-story, accessible, ADA compliant, non-threshold ADU in the back that's going to be brand new, ultra efficient, so you can peacefully age in place, and then the home, right, stays in the family, right, stays within the family. So literally, those words I do not utter anymore. I used to think that was the only solution. Hey, you're an empty nester. Look, even that was like a term we started using. You're an empty nester. Have you thought about downsizing? Because look at this big freaking home. Like, it's like 5,000 square feet, and it's just you and your husband. No. No, I don't want to downsize anybody. I want to upsize, you know, my 62-year-olds, seniors, my baby boomers. And the reason why is because we have been riding their coattails this whole time. You know, they're the generation that owns the majority of the real estate wealth. However, they no longer are the largest generation. And this is true story. I just found this out a couple of days ago. The millennials are now the largest generation. Now, they're not the largest wealth owners of real estate. It's still the baby boomers. But here's another thing, and I'm going to predict it right now. What's the date? It is September 3rd, 2020 at exactly 4:35 p.m. I'm going to pull a Nostradamus thing out of my hat. There it is. The largest transfer of wealth will not happen. The largest transfer of wealth, meaning from the baby boomers to the millennials, right? So from the largest holders of real estate to the largest demographic or age group will not happen via a real estate sale. It won't. So all of you real estate agents that are chasing the millennials, trying to convince them to buy real property, you're going to be able to convince some, and you're probably going to convince something like 5%, which sounds like a lot. It's going to be a lot of volume, a lot of transactions, but only 5%. And the reason why is because those grandparents, they're not going to sell their freaking properties, especially now with the power of the ADU. They're going to be transferring the wealth to their grandchildren.
Yep.
Right? They're going to be transferring that wealth through inheritance they're going to be transferring that wealth through inheritance, gifts, or something that we all studied in real estate principles class. But I think that all of the real estate agents forgot what these things were. They're called life estates. You're going to start hearing more and more about life estates, because that is exactly how wealth is going to be transferred in America between the boomers and the Generation Zs, the millennials. Now me, my Generation X's, we're going to continue to buy and sell property all day long, because we just don't have, most of us don't have grandkids yet. You know, I've got 2. I've been blessed with 2, but I tell my friends, hey, are you a grandparent yet? And they're like, no, we're not. I'm like, come on then. Tell your kids to get busy, man. Get those grandchildren out. You want to have the energy to freaking spend with your grandchildren today, not later on when you're like, oh man, hold on. Let me get to that wheelchair.
I'm just so mesmerized by you.
You're
Okay,
so funny.
I know. Let's just so let's get to the last 2. How about that?
Damn, these are the ones that are like right now, they are not popular because they sound too good to be true. So every time I say, it seems like the obstacle is the mortgage payment.
Right.
Because these people do not want to rent their ADU, so that's why they're like, no, I'm not going to rent it, so I can't count on the $1,500 for my 2-car garage conversion. But I don't have the money. So I mean, actually, I'm sorry. The DTI doesn't make sense. The debt to income ratio. I don't have the income. So now what? What solution do you have for me? All right, I'm gonna throw this at you. You can have your ADU with no monthly payments. So you're still taking on debt, but no monthly payments. And they look at me and they're like, wait, that doesn't make any sense. They think I'm freaking crazy, right? They think I'm crazy, Danica. And I tell them, here's another thing that we studied and learned in our real estate principles class. So I really did read that book. It's called a SAM. Is that the first time you guys have heard that acronym? It's an acronym.
Yes.
SAM. And look it up. Real estate principles, right? It's going to be in all of the courses.
Look at Izumi trying to find her principles.
I can't.
Yeah.
Look at my notes.
So life estates.
I don't think you mentioned that.
Right. So life estates, I didn't invent that. That's like a long time ago.
Archaic.
But right, it's archaic, but it's definitely going to be very, very popular. Mark my words, it's going to be very, very popular. A SAM is an acronym for a shared appreciation mortgage, right? So that means that in this case, I'll be the investor. You want me to build that $100,000, I'll just use a simple number. You want me to build that $100,000 ADU on your property? No problem. I'll build it. But I want to share of the appreciation, because right now real property is appreciating on average 3%. Now in Southern California, it's appreciating more like 4 to 5% because this market's just on fire. But because there's companies like Unison, Noah, Point, HomeTap, you name it. I work with like 10 of them. They literally are in that space. They don't call them SAMs because they don't want to call something. They want you to think that they freaking invented this. But the reality is a SAM is a shared appreciation mortgage. Do you know that the city of LA does this too? Izumi, Danica, did you know that the city of LA even offers SAMs?
No.
They call it the LIPA program.
I've honestly never heard of this.
Man. So Danica, that's how crazy I am. I'm so freaking nerdy. That's all I do. My wife's like, babe, stop reading that book, that real estate principles book. And I'm like, babe, it's because guess what? every real estate agent has uttered these words. Yeah, so when I got my license, I studied for a test, and I studied this stuff that I'm never going to use. But now I'm selling real estate. Guess what? I'm using that stuff. Because the minute somebody says that they're not going to use something, they've given me an advantage. The minute somebody says that they're not going to do something, guess what? I'm going to be that person that's going to do it. And so, yeah, I don't have any freaking silver bullet. There's no magic. All I'm doing is doing things that nobody else wants to do.
It's
That's it.
already existing. It's
It's already existed. I haven't invented a damn thing. The only thing I've invented is I don't want to call ADUs accessory dwelling units. I want to call them awesome dwelling units. That's the only thing I've freaking have invented, Izumi Tanaka. Oh, okay, that's right. That was number 9.
Right.
I'll
We
build
have
that
one more
ADU.
left.
I'll build that ADU. Just give me a share of the appreciation. So as your home is appreciating up, and that share is negotiable, right? As your home is appreciating up, if it appreciated at $100,000, because they can't tap into the existing, that wouldn't be fair to the homeowner. But if the home appreciated $100,000, hey, cut me in on 10%. That means 10K, you know.
After it's built, though.
After it's built. After it's built.
Right.
Yeah.
Just to clarify that for those listening. After
Yes. So it literally is a win-win. So how you get out of it is a shared appreciation mortgage is nothing more than a balloon payment loan. That's what it is, right? So that means that at any time, if you want that investor to get out of your backyard, you just pay them the cost of the ADU because they paid for that, right? Those sticks are owned by them. You just pay them plus the predetermined percentage that they wanted to make on their money, right? Which is the finance charge. So if you want out, like next day, like, you know what? Actually, I don't want you in my backyard because you guys smell and you guys bring like beer and cakes and you have parties in my backyard, and I don't want you guys here, right? Then yeah, just simply pay them the money and then you're good. You're golden. The next one is, and again, didn't invent this. All it is a freaking land lease. That's all it is, right? I, the investor, will build that $100,000 ADU on top of your dirt, right? And I will rev share a percentage of the rent to you, the homeowner, for letting me build my sticks on your dirt. That rev share is negotiable. And however, the caveat is on that one, because I'm rev sharing, it's my sticks. I decide who is going to live in that ADU, in my ADU. So that means I take care of all the tenant screenings. I take care of all of the broken pipes or clogged plumbing. I take care of that all stuff. The only thing you do is you give me your dirt and I give you a share of the gross rent. So if it's $1,500 every month, you're collecting $500, just as an example. I'm giving you a third of it, and that's the 10th. And those two, and so who's doing that? United Dwelling from Los Angeles, California. United Dwelling does that type. So yeah, as you can see, I'm very, very transparent. I've given you CMG. That's the first position home equity line of credits. United Dwelling, they do the land lease. The SAMs, NOAA, Point, Unison, Home Tap. There's more. You know, I just can't. My brain just, even though I'm crazy, I don't have a really good memory.
So in those last cases, Rogelio, who is responsible for maintaining the ADU?
Yeah.
Like who pays for the repair and maintenance and stuff like that?
Great question. So on choice number 9, which is the SAM, the shared appreciation mortgage, the homeowner does.
Okay.
On the land lease, they do. They take care of all of that.
And you just take the money.
You just take the money.
Wow.
You just take the money. Yeah.
Now, question I have on that, what's the average percent? I mean, how many of those have you seen on number 10? And what is the average percentage that the homeowner is getting in return?
I would say on average, it's probably 40 to 50% of the share. I haven't seen anything higher than 50%. And the reason why is because 50 just sounds like a nice win-win number, right?
Right.
So I think I think that that's what's going to end up being the norm is, hey, these are my sticks. That's your dirt. How about 50-50? How about we partner? I think that's going to end up being the norm. Now, United Dwelling, and hopefully when Steve listens to this, because I'm really plugging them right now, United Dwelling does something that's really freaking unique. So their cost of production is really, really low, probably lower than most builders. And the reason why is because they literally get 5, 1, 2, 3, 4, 5, and I'll say it in Spanish too. 1, 2, 3, 4, 5 homeowners in the same little area, and they tell them, okay, we're going to come in like gangbusters, like Henry Ford and an assembly line. We're going to build all 5 ADUs simultaneously at once. That's how they keep their costs down for labor, materials, and their suppliers, and they're ultra efficient, right? So one of the first things that an ADU builder is going to do is they're going to trench. They're going to trench for all your gray water. So that means your PVC, your black pipe, because they're going to tie the sewer, right, the independent sewer to the main, right? So literally, United Dwelling hires a third-party company that literally is going to do horizontal trenching. So meaning none of this old school just shovels. They come with a horizontal trenching machine and literally start scooping up the dirt on all 5 properties. They literally go from property A, property B, property, and down the road, right? Just like Henry Ford. It's like Subways. They're just, they're making your little sandwich. And so they're
analogies are hilarious.
So United Dwelling, as a matter of fact, housing is so freaking hot right now. Oh my God, it's so hot. It's
So
housing.
Rogelio, though, that brings me a question though. I have a question
so
from our
many.
audience as well. But so in that case though, the owners, like if I am the homeowners that I'm giving you the dirt, the stick builders, as a homeowners, do I have any say about the quality of the ADU that we're going to build, or what I want, what is it going to look like in my backyard? Do I have any say so about the design of it? And the question I have from an audience is, you can address that later, but what's the average cost of garage conversion these days? So you can address both of them.
I'll take the latter question first.
Okay.
85,000 is an all-in 2-car garage conversion. A typical garage is 20 by 20, so that means 400 squares. And I'm talking studio, because in most cities, in order for you to at least have a 1-bedroom, like in my beautiful city of Long Beach, the dwelling actually has to be at least 450 squares in order for you to actually have a 1-bedroom dwelling. So meaning what I'm trying to say is, for 85,000, standard finishes, no appliances, studio, you can have a amazing 2-car garage conversion ADU into a studio for 85,000 all in, right? Okay. Let's see. Then the first one was, do you have a say? So in this case, because it sounds like the last 2 are the ones that are just like, wait, what? Those are probably the ones that are getting the most questions. So United Dwelling is not going to build typically ADUs in an overlay zone, right? And I know you guys know this acronym, in an HPOZ, in a historic preservation overlay zone. And the reason why is because there's just too many hurdles. There's an additional hurdle for them to go through. So if there was a company like United Dwelling that came into like a Hancock Park, perfect HPOZ, right? They're not going to be going in there. And the reason why is because that's going to slow them down. That's not going to make them efficient. So for you listeners that live in like an HPOZ, and there's a bunch of HPOZs throughout Southern California, right? Every city has HPOZs. I think my city, Long Beach, has like 17 or 18 of them, right? You're not going to be doing the number 10. Yeah, you're not going to be doing the number 10. It's just not going to be feasible. It's not going to be a win-win. So does the homeowner have a say-so? Absolutely. And the reason why is because at the end of the day, What is more valuable? Think about this, because we also learned this in real estate principles class. I'm gonna close my eyes so that you guys can think about it, right? What is more valuable, the land or the improvements? What's more valuable, the land or the improvements? Do you guys have the answer?
The improvements.
Okay, Izumi says improvements. Danica, what do you say?
Oh, I don't.
Danica? Danica's looking up Google right now. She's like, I'm waiting for Danica.
I think are you looking up land or improvement, Danica?
What's more valuable?
Yeah.
No,
Danica?
that was me.
What?
I'm sorry.
You cut out what?
Oh, I'm sorry. The question is, what's more valuable, the land or the improvements?
Oh my gosh. Well, the land.
The land.
That's a no-brainer.
The land is always
That's true.
Well,
more
and I
valuable.
gotta tell you, my mind is like, I almost want you on next week because I mean, just from an investor's point of view of what you can do with this.
Whew, man,
I mean,
we haven't even gotten into the investment stuff.
I
which is like
know,
a
like
whole
I'm
nother
sitting here
topic.
thinking, like, oh my God, like, okay, now the question I have on number 10 though, how does it work if you resell the property? If you sell it, then what happens to that ADU? Is it grandfathered in?
No. So great question. So just like any LIPA program
Is it
or
grandfathered in?
Sorry.
no, that's
Huh,
okay.
really,
I like-
that was really good question. It reverb.
Yes, it is. It is. It's a really good question. Plus, I can hear my sexy voice again twice.
Sorry.
So it's not grandfathered in. So payback on any balloon type loan will automatically happen on two things: refinance or sell. So once you do that, you literally trigger the, okay, remember me? I do own those sticks, right? So don't forget about me. So literally it's written in that contract that if you're going to refinance or you're going to sell the property, guess what? I get paid. You know what I mean? So that's how that works. So great question, Danica. Oh, but wait a minute. There is actually a little caveat.
Oh,
And I can't say this. So
don't say it.
right now, the only two entities, not institution, the only two entities that can actually lot split a residential property is a nonprofit, meaning a charity, or a church. They're the only two entities that can lot split a residential mortgage. It's written in our new ADU statewide ordinances that went into effect as of January 1st. We just shot down, and I'm going to say we because I'm part of the people, the breathing people in this Southern California, but we just shot down SB 1120, which is the subdividing, land splitting bill that was going to make every SFR, meaning every R1 zone type lot, the ability to go from overnight to a duplex. We just shot that down. So I think we're going to see a variant of that next year. Yeah, so that almost was going to happen. And if that happened, oh my gosh, it would have been, that probably would have caused the ADU explosion. So we're going to have to wait a little longer for the ADU explosion. So if you're a nonprofit, so I bet after the show, everybody's going to start doing their 501c3. They're going to contact LegalZoom and say, hey, create a nonprofit for me. Why? Because I want a lot split. So yeah.
All right. Well, I think we are just overwhelmed with this all information that you gave us today.
Oh my
And
God.
I gave you like 1%. I mean, literally, I gave you what just is. Yeah, I mean, I can go on and on. You guess what I'm about to do? I'm about to go to Compton. Yeah, Compton, California, to this place called Tacos Don Cuco. Cuco, Tacos Don Cuco, and look it up. So because we're live, right? If anybody wants to join me, I'm going to be in Compton at 5:30 p.m. That's when they open up. But I'm going to have some Tijuana style soft tacos. And literally what I call it, and today's the first day, I call it ADU and tacos, right? So that's how I'm going to empower people. Like, hey, let's go have some delicious tacos and have some ADU in the parking lot of Walmart in the beautiful city of Compton. So yeah, so that's what I'm about to do right now, because I just love talking about ADUs. I can do this for 24 hours a day, 7 days a week. I could be
know.
sleeping and somebody can say, hey, Rogelio, tell me about ADUs. I'll say,
Okay.
ADU, awesome dwelling unit.
Hi, Denise. How
So-
are you?
So let's hear from
Good.
you.
I'm calling as I have
Danica,
my docs
unmute.
ready and wanted to see if you
Danica,
were
unmute.
available this evening.
So tell me how we can find you, how people can find you.
If you want, you can come
Oh,
over to my
okay. Well,
house.
they are ready this evening, and they
Actually,
wanted to see if you
no,
could
my-
come this
Danica,
evening.
My wife would say, no, don't do that. Don't come over to my house. So how can you find me?
Sure.
The best thing is on Instagram.
Okay.
So it's at welcome, and I spell welcome with a double V.
V.
So instead of a
VV.
W, it's VVELCOME.
I can.
And think about it. So the W is the only letter in the English language that's made up of 2 letters.
Okay.
W
Well, I'm coming from
Hold
Sierra
on.
Madre, so
Danica.
you'll probably be there by 6.
Danica's coming from Sierra Madre. She'll be there at 6.
Danica's coming from
Okay,
Sierra
perfect. I
Madre.
will see you then. Thank
Danica's
you.
going to Compton from
Escrow
Sierra Madre.
does, but if you want to text it to me, that
She's
just
gonna get
save
there
me
at
a
6.
step. That would be great. Thank you.
I'll save you 2 steps. I'll
Let's
pre-order
just
6
wait there.
tacos for you.
Okay, we were waiting for you to finish up, Danica.
I'm ready.
So you were unmuted.
Oh,
So-
sorry.
That's okay. That's okay. I said, don't worry. I'm going to save you 2 steps. I'm going to pre-order the tacos for you. And I just told everybody that you're going to make your way to Compton from Sierra Madre. There you go.
Okay.
I'm so embarrassed. I apologize.
No. As a matter of fact, you know what? This is going to go down as probably your most popular deal. And the reason why is because people love this unscripted stuff. You know,
Yeah.
they just want the raw stuff.
Yeah.
So people, you can find Rogelio on Instagram at VVELCOME, right? ADU. I think.
No, just welcome.
Oh, welcome.
Yeah.
Yeah.
Now, and
Well,
then the other way is because I just gave everybody just 1%. On October 19th, I'm putting together the first national ADU summit called ADU America. And I'm going to have 100 speakers from across the U.S. and 10 live panels all happening in the same day on Monday,
Wow.
October 19th. Tickets are already on sale. The early bird tickets are already on sale for $20. And it's literally like I'm absorbing the fee for everybody, meaning if you go in there and buy a ticket, it's exactly $20, not $22.13. It's exactly $20 because I'm rewarding you for being the first people to buy the tickets for ADU America. And yeah,
America.
so that's on Instagram, ADU America. We have speakers from Washington, D.C., Minneapolis, Minnesota, Atlanta, Georgia, Austin, Texas, Portland, Oregon, Vancouver, Washington, the Bay Area, San Diego, you name it, speakers from all over. And the reason why is because ADU is not a Southern California thing, it's an American thing. So it's across the nation, ADU America.
Yeah. Thank you so much, Rogelio. This was so much fun.
Let's do it again. Let's do it again at midnight.
Yeah, so we'll have this on YouTube, right? Right, Danica?
Yes. It's going to
So
be
we'll-
converted to YouTube and our page. But I really want to talk to Izumi about having maybe you on next week because I want to maybe talk to investors and get creative with this.
Yeah.
So I don't know, but I'm not going to anyway. I think you're like amazing. You're so intelligent. You're so creative. You really think outside the box. And I'm telling you, that's the market that we're going into. Just like we did in 2007, 2008, we had to be creative. It's not going to be like 2007, 2008, but it is going to cause us to be creative and thinking outside the box. So
That's
you're
exactly right.
amazing. I want to come meet you and like do tacos if I didn't have to do loans signing tonight. But hey,
Every Tuesday, and I'm going to switch it up to a different place, but every Tuesday we're literally, it's going to be a trend. It's going to be ADU tacos at a different taco place. So I
I
think
love it.
next Tuesday it's going to be in a place called Luis's Butcher Shop in Downey, California.
Okay, wow.
And this is their shirt. There you go. Luis's
I
Butcher
love
Shop.
it. I love it. I love it. I love it.
There you go. And you know
Awesome.
and I don't even own that butcher shop, but I just love small business owners. And right now, small business owners need so much love because of the illness. So I'm just doing my part. I'm trying to bring more customers to their place. I get to talk about ADUs and I get to help a small business owner. So that's why I do that.
Awesome. 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 Well, thank you
I
so
think,
much, both of you.
thank you so much, Rogelio.
And just so you know, Helio, we'll make sure you get a copy of this recording for you and your business. And I look forward to building a relationship with you for sure.
Yes, me and Izumi are already like this. And Danica, me and you will ultimately be like that.
I just want to be in the middle.
Oh, perfect. Perfect. That would be like a Danica sandwich.
Okay. All right. Love it, guys. Well, thank you
right.
so much. Have a great day.
Thank you. Thank you, Rogelio.
You're welcome. You're welcome. Bye-bye.